Hey traders. So I'm just doing a real quick look at our JEX levels. That's our gamma exposure levels and where prices are trading currently here in the markets. Okay. And so I'll start with SPX here, guys. And so basically we did manage to close under a critical support level there Friday and below the 20 SMA. Okay. In addition to that, we have the 50 SMA and the massive put wall is at 6,000 here in the markets on SPX. So we do have a massive put wall at 6,000 here on SPX, and we also have a significant call wall at that price point as well. So be very mindful of that. So my thinking is here, since we lost that support, we're probably going to come down to that 6,000 level early on this week and see if we get a higher low back test to maybe tighten up the range going into the end part of the week. So basically, ultimately, we're looking for uh, uh, a situation where we come up, like this, and we're looking for a tighter range recovery here to uh, build a uh, situation of range compression for a potential breakout, to the upside at the point. Otherwise, we're looking for a completion of this pattern on this down move. We're looking to come down to support and then try to do the range compression for a break lower. Okay. So those are the two scenarios that I'm really looking at here. We're really looking for the range compression situation, which we do not currently have. So, coming in this week thinking we're going to get a range breakout of the major range lows and range highs is, until we get that compression, in my opinion, we're not going to actually see that breakout. Now, don't get me wrong, anything can happen. We could have some sort of news event that could do something like that. But it looks to me, like this range compression, we definitely need that. Okay. Now, historically, the first week of February is pretty good, but then it kicks off the weakest period of the trading year. Okay. So the period after the first week of February to mid-March tends to be the weakest uh, period historically for the markets. Okay. Uh, so be very mindful of that we're entering that historic weak area in the markets. So, the back testing supports are a higher probability scenario. So, you're coming in tomorrow. I think, there's a really good chance we'll be at back testing 6,000 early this week. That's my first scenario here. Now, I don't know if you want to buy right off the 6,000 or not. It's hard to say. We may just come down here and buy down there. But I know 6,000 there is a massive foot wall and a massive call wall, so it is a gravity point. So that's more like a pivot. 6,000 is more of a pivot. So coming in on the pivot and trying to buy the dip, it's a higher risk trade than trying to buy an extreme from that pivot. So, bottom line is if we come in early in the week, we're at 6,000. Is that something you want to immediately buy? Probably not. Okay. Okay. Now, when we start getting into the NDX and the RUT, it makes it much more difficult if you're trying to identify the JEX gamma exposure. Sometimes on those things, just not enough volume in those options. So a lot of times it's better to go with the Qs and the IWM on those two indices if you're trying to gauge the markets. But for today's purposes, that's what I'm going to do here. Uh, so basically, what we've done here is come down into the monthly call wall for the NDX. So this little blow off top, we were in positive gamma all the way up here, okay, on the monthly time frame. We've come back down and we're back testing that positive gamma. So bottom line is, in this chopping range, what they've been doing, they've been blowing up the uh, anything that's out above, in positive gamma or negative gamma, they have been blowing up those option holders. So you have to be very mindful here. We're at the top. We're at right at the call wall, which if you're bullish the market, you want to see them save it right here. So we want to be very mindful here. If you're bullish the market, the bulls should come in right here to start winding a tighter range here on the NASDAQ. So be very mindful. This is a very, very critical spot on the NASDAQ. And that probably has a lot to do with why we saw relative strength in the NASDAQ on the Friday's sell down. So we have to be very mindful of that. That being said, we might want to be looking at, they held the NVIDIA right around that, right awfully close to that 130 area there Friday. And if NVIDIA starts breaking out of that 130, I mean, guys, this thing's going to really start, this thing will probably likely start coiling up, you know, starting to get range compression here until finally we will get the breakout. Don't know how many times it'll take, but that's just something to think about on the bullish side. But this is something, the main scenario coming in today into Monday, we have to see this hold, the Nasdaq holding up right out of the gate Monday morning. We don't want to be accepting prices much lower here on the Nasdaq. We are above the weekly 20. That's another thing here, guys. This weekly 20, that is actually the range low. That is the support of the range at the weekly 20. That is another very valid. So you can get a little bit lower there into the weekly 20 there, find support there, and start building from that. So you don't want to jump the gun here. Oh man, we're red out of the gate by a few ticks. We want to be going short the market. No, I mean honestly, you know, we just have to be very mindful of that. All we know is for a lot of weeks now, they have the market makers have been quite able to blow up uh, the call premium and the put premium. Okay, and so I would much prefer us migrating down here to continue the trend that we've seen for several weeks now. So this food for thought in the back of your minds. Now on the put wall side, it's way down here. 21,000 is our put wall. So migration all the way back to 21,000, that just blows up the call wall. The puts actually build in, and then maybe a higher low failure, unable to retag the 21,000. That would be giving us a really good clue. Anywhere through here would be giving us a pretty good clue by the dip is a very likely possibility. Not being able to come actually. And so far, remember, guys, we have not for some time now broken that 21,000 put wall. So we are breaking to the upside on the call wall on the monthly time frame, but we are not breaking the put wall to the downside so far. So just some little things, little takeaways. The market structure. The market structure clearly leveraged to the upside. Especially in the Nasdaq. But we are post the megatech earnings, and there's things. A lot of things broke there Friday. We have Apple, Tesla, Google, they all broke support yesterday and they have room to go to the downside. On the flip side, we do have Apple and Microsoft potentially into a support area. That doesn't mean they may not be the next ones to break. I'm just saying we are going into Monday with Apple and Microsoft potentially supported at this price point. So let's definitely keep those ideas in the back of our head going forward here. Another takeaway here I do want to point out here, this right here represents our neckline high support. It's right around the 21,200 area. So basically, we're pretty much in the all clear on the bullish side and until we on the weekly time frame until we break the 21,200. If we get a 21,200 close below that, then we're actually breaking on the weekly time frame. So the bulls are in charge on the bigger time frame until we break that on the NDX. I forgot to mention that on SPX. Give me a second. Going back to SPX real quick here. The neckline high on SPX, you're looking around 58.60, 58.65, somewhere in this area. That is on the bigger time frame. That's whenever you really got to start looking swing short the markets. Anything up here you're doing, this is intraday trading. This is just intraday chop. But losing 58.60 area, that's a major warning to the markets, and we're a long ways from that. So just be keep things in context. Now, in the Russell, things potentially are different. Right here, guys, that right there is the neckline high. So we literally have potentially broken the head and shoulders, and we're into the neckline. Okay, so while the S&Ps and Nasdaq are holding in what potentially is the head area, uh, the Russell is not. So it's a different situation here. And I was shorting these highs there earlier this week, and I had a really good win shorting those highs. And so uh, my main takeaway now going forward here. Uh, Bottom line is we rejected this. This is more bearish, so I would think a retest of our support area here is probably very much in the cards. There's no reason to be going long this into early on in the week. We are below the daily 20. We haven't got back down to the weekly 20 yet. So at the very minimum, a back yeah, there's a lot of things to think that we'll probably overshoot the weekly, test the main support, and then potentially bounce from there. I mean, that's the bullish case. I mean, uh, but boy, I tell you, they were really looking for a reason to sell those highs there Friday. So 10 o'clock, that data came in, which uh, uh, immediately they were selling into that data dump at 10 o'clock there. As Michigan consumer sentiment or something like that. Immediately they were selling into it, telling you really quick that there was a bearish bias. They were looking for every reason to sell into it. And remember, guys, we were trading in a positive gamma situation on the monthly and on the weekly time frames in those indices. So it gave the markets an excuse to pay Wall Street. Wall Street gets paid by pushing that stuff out of positive gamma to close out the option expiration date, and it gave them every opportunity to do that. So just be very mindful of that. That's, to me, it was as much as important. It wasn't really the news as much as it gave the market an excuse to destroy the positive gamma situation. So by putting the two together, if you know you're going into a news event in a massive positive, massive negative gamma situation, most of the time, 70, 80% of the time, they're going to revert that back on the news. The news itself isn't really the catalyst. It's an excuse to put things back and destroy the option buyers on either side of that equation. Okay, so that's pretty much what I saw happening there Friday. One last thing was the VIX. Important to note here, the VIX found critical support there Friday. So we in our support here found critical support. So we're going into next week. There's the pattern looks like rinse and repeat. So I move back down to the bottom end of the channel. The range is quite possible. Blowing up that option premium once again. So we'll see how it plays out. They either break us down, or they hold these critical areas in the market, and see what happens. Uh, Bottom line is we're still waiting for the range to start tightening up, and that could very well happen starting Monday morning. So I just want to be keep everybody very mindful of that. I'm having trouble loading charts. Let me see if it'll load this time. Yeah, skew came in. So we did tick up on our skew a little bit there. So that's the out of the money put action increased there Friday. So that is confirming, you know, traders are just kind of trading the range. The trading the ranges, the extreme ranges, and that's pretty much all I'm seeing here. So. Okay, that's pretty much all I got to say here. You got to be a range trader in this market. I mean, there is nothing trending in this market. So, and the reaction to the megatech numbers has been bland at best. So be very mindful of that going forward. Uh, there just hasn't been that big appetite in owning that megatech. Instead, there's been rotation into financials. Uh, so we have to be quite mindful and be very uh, be very mindful of that situation. How uh, you have now that the core mega cap numbers are gone, that we could actually start seeing a faster rotation out of the megatechs. You know, and a lot of times since they are such a major component of the markets, you know, the money's going in the financials will probably not outweigh the money's coming out of Megatech. So that's just what I'm thinking in the back of my mind. So thanks a lot, and I will see you trading tomorrow.